It's firmly in focus because of the pure privacy narrative, the technical maturity of its default private design, the long track record as one of the most resilient privacy coins, and the simple fact that demand for on chain privacy tools tends to cycle in and out of attention with regulatory and market conditions. If this is useful, hit the like button, subscribe if you haven't already, and leave a comment with your honest take on XMR. I actually read them. Looking at ratings and signals, short-term scanners have turned more cautious after the rejection from recent highs, while longer-term and fundamental leaning views remain more constructive because of the privacy narrative and the protocol's established technical foundation. You will see a mix of hold and mild sell readings on pure momentum tools, balanced by the still strong relative ranking. Funding and open interest in the derivatives market stay active given the volatility. The short-term outlook from pure technical sources is more defensive until price can reclaim and hold above the recent resistance cluster with conviction, while the broader narrative around privacy remains one of the more durable themes in the market. Here's the real debate. Is XMR still undervalued or fairly valued after the run, or is the current level starting to look stretched? One side points to the mandatory privacy design, the technical maturity of ring signatures and confidential transactions, the long history as a leading privacy coin, the distance from previous cycle extremes, and the idea that demand for truly private transactions could re-rate if capital rotates back into privacy narratives or if regulatory pressure increases elsewhere. They argue that if usage of private transactions grows and the broader privacy theme strengthens, the current market cap could still leave room. The other side says, look at the valuation and the recent price action. What's going on with Monero right now? The chart has pulled back from recent highs, some short-term sell signals have appeared, and yet a lot of people still argue this thing remains one of the stronger stories at these levels. How do those two views line up? Let's talk about it. Monero is a privacy-focused cryptocurrency that uses ring signatures, stealth addresses, and confidential transactions to make every transaction private by default. Unlike optional privacy coins, Monero's design prioritizes untraceability and fungibility as core features. XMR is the native token used for transaction fees and network security through proof of work mining. It currently ranks near the top 15 by market cap with solid daily volume, and the price has been trading near the levels you're seeing after a multi-month run and subsequent consolidation. On the technical side, the bigger picture shows a clear multi-month uptrend that has more recently entered a consolidation or corrective phase. Price has made a series of higher highs and higher lows over the larger time frame, but short-term action has produced lower highs and tested support after the latest push higher. Momentum indicators cooled from the more extended readings seen during the strongest parts of the run, and volume has remained elevated relative to many other mid to large cap names. Moving averages on the higher time frames still lean constructive, while the shorter time frames look more mixed. Short term, it feels more like a digestion of gains than a full trend reversal. You can argue the larger structure remains intact as long as key support holds, but the immediate picture has become more range bound and reactive. After a strong multi-month advance, the token is no longer cheap on an absolute basis relative to many other large cap names. Exchange support has been uneven due to regulatory scrutiny, and any slowdown in attention or rotation away from high beta assets could pressure the price. That's the tension. The technology is real and the privacy narrative remains relevant, but the market has already rewarded the story and is now more sensitive to any loss of momentum. Retail often gets caught on both sides here, either chasing the narrative too late or underestimating how quickly attention can shift even for projects with real technical foundations. Bull case versus bear case is relatively clear. clear. Best case, the privacy narrative strengthens, private transaction usage grows, broader market risk appetite returns to large cap privacy names, and price manages to reclaim the higher levels of the recent range. In that scenario, the larger uptrend can resume. Worst case is a deeper consolidation or correction if attention rotates, regulatory pressure increases, or broader market conditions turn risk off. In that scenario, the token could spend time grinding lower or sideways while the market reassesses the valuation. Risks are still meaningful, volatility remains high, a broader risk of move, increased regulatory scrutiny on privacy coins, delistings from major exchanges, or a drop in relative interest can hit the token. Downside is open if the current support zone breaks and the correction deepens. Even projects with strong technical credentials can experience multi-week or multi-month drawdowns after large runs. Liquidity is solid relative to most names but can be thinner than the very top assets due to exchange restrictions, so larger moves can still happen quickly. There is also the structural risk that comes with any privacy focused asset. The narrative has to keep generating demand or the token can lag relative to the broader market for long stretches. Short term, the picture still looks more consolidative and reactive than strongly impulsive. You need to see stronger volume and a clean reclaim of recent resistance before the short term bias flips with real confidence. Longer term, it comes down to whether Monero can convert its mandatory privacy technology into sustained demand and relative outperformance for the XMR token. That's the path that keeps the current levels looking constructive rather than extended. Nobody knows which way this resolves. The technology is mature, the privacy narrative remains relevant, and the market has already given it a strong ranking, but the chart is still digesting a strong run. So the real question is simple. Is this the kind of project that can keep expanding its role as a leading privacy coin and push through the current consolidation? Or are we watching an established large cap name settle into a longer digestion phase while people debate whether the valuation still has room?